This is not financial advice, not legal advice, for entertainment, educational purposes only, and anything I say is my opinion. Please don't make any financial decision based on anything I say in these videos. That being said, hit the like button, subscribe button, all that YouTube algorithm stuff, so you get the videos I put them out. See them thinking, see them analyze that data. But like I tell every day, the data they release us is false. Man, it gives a false narrative to market so we can make bad trading decisions. Listen, they want us to think that the banking sector is doing great. They want us to think that the economy is doing great. But the numbers tell a totally different story. And I'm going to tell you guys something, and this is just my opinion. I'm not telling you to buy, hold, or sell any stock. I'm not telling you to invest in real estate or not invest in real estate. I'm just telling you this. The delinquency rates on multifamily properties has surged to levels higher than 2012. Okay? The graph behind me shows that the multifamily delinquency rates is out of control. And you know what this means? This means these banks are not only sitting on unrealized losses from the commercial sector, but from the multifamily sector also. How is this gonna turn out well when all these loans go into foreclosure? Not only do the banks don't have money coming in, but now they have to spend money to foreclose on the loans, maintain the properties, which you know they usually don't do. So there's additional local fines and fees associated with delinquent properties that's going to be affecting the bank's bottom line. The bottom line is this to me, is this. The banks are in trouble. They're in deep trouble. They are going to collapse in 2024. I believe it's going to be worse than last year with Signature Bank and SVB. I think much more banks are going to collapse. And while that is bad for the economy, I personally think it is good for anybody who's long on AMC, GME, and other stocks, because it will force the bad actors to have to go and close out their naked short positions, because there will be no money for them to continue these positions. The liquidity of the banks, when the banks fall and the bank's liquidity runs out, they no longer have liquidity to give these high-risk loans to these bad actors, naked shorting AMC and GME. Now, if we had regulatory agencies that protect the retail investors, if we had something like a SEC or NASAA or DOJ that enforce the laws of the market, we wouldn't be in this situation right now. But and this is just my opinion, and I'm not trying to buy, hold, or sell any stock, I believe because the SEC refused to enforce the rules of the market, because the NASAA sat on the sidelines, that is why we are in this precarious position right now with the economy and with the banks, because these regulatory agencies allow their buddies in the financial industry to do whatever they want with retail investors' money. I mean, that's really the bottom line. Because if they were robbing the 1%, it would not be tolerated. But the minute they rob retail investors, nobody cares. And if they do care, the investigation takes 5 to 10 years. And by that time, nobody is ever made whole. But the coffers of the SEC keeps getting bigger and bigger and bigger, because they get their money. We just don't get ours. Anyway, please leave some comments. Tell me what you think. Do you think that the surge in multifamily foreclosures is going to have a negative impact on the banking sector? Anyway, have a great day. God bless, and I appreciate y'all on this journey with me.